Good morning, good evening, good whatever time it is you're listening to this. I hope you're having a good one. I'm going to be going over the data sets and the SPY for June 20th, 2025. And with that said, let's go ahead and jump straight into the data. Go pull up, there we go. Alright, so tomorrow is not a very busy day. It will be a full trading session. I know that we had Juneteenth today, so it was a holiday, but again, the overnight's kicking in now, and it will kind of resume back to normal operations starting, tomorrow at the open. Now, before we go over the data, just a reminder, the ex-dividend did hit, so it's taking a whole $1.76 off the top. I was expecting closer to the $1.80, but we got the $1.76 instead, which that's completely fine right now. That's still a full almost $2 off the top price. So, right now currently the overnight's at like one or not one. It's at 594-ish. So that's pretty much exactly where we were expecting. Actually it's a little slightly under where we're expecting right now. So we'll go into that, but just a reminder, yeah, that ex-dividend did hit already, so you don't have to worry about it like hitting at the open or something. No, it's already been applied to the price. It happened during the holiday. So, okay, tomorrow, 8:30 in the morning, we have the Philadelphia Fed Manufacturing Index. Not super, super big. I don't think it's going to move the market a lot. We've been seeing a lot of the um, manufacturing data and everything cooling down, so coming in at negative rates. The forecast has it set to a negative 1.7, but very likely it's probably going to be closer to that negative 4 since I believe let's see, I believe the Wednesday data was super, super cooled down. Um, no, it might be the Tuesday or Monday data. I don't remember. I know there was a manufacturing report this week that was extremely, extremely cool. So, I do expect some of these manufacturing reports to kind of follow in that footsteps. Now, let's see. U.S. leading index. That doesn't matter a whole ton. And then we have the oil rig stuff. That doesn't matter. That doesn't move the market at all. So, not a very, very busy day tomorrow at all. But we also have OPEX, so that's pretty much going to, take the day for what's important or not. Just a quick reminder before we get into the technical analysis. If you've been finding value in my insights, consider joining my Patreon. For just $12.99 a month, you'll get access to my trades, courses, and powerful tools to help you grow as a trader. I'd love to have you be a part of our team and community. And it's less than 43 cents a day. So if you'd like to join, click in the link in the description. Thanks. Alright, and getting into the TA, as always, let's go ahead and open up our daily time frame. Let's open up our moving averages and our Bollinger Bands. Now, just be aware that, hold on, I just want to check if I can set this up on here really quick. Um, there was the ex-dividend, it happened yesterday, but it's already hitting the price action. So it was a $1.76. So essentially, take all the moving averages, take all the Bollingers, take the whole price, the current price, and you minus the 176 from it. So currently, the overnight is at 594.60. But with a calculator, one second, I have to pull it up. 594.60 plus the 176. Okay, so essentially the overnight right now is at 596.36. Okay, so with the market price closing at 597.44, technically we are down a whole dollar right now in the overnight. So that's good. Technically that's pulling us very close to our 20 mall level. Now, let's just go over the moving averages, and this is going to be a little wonky because I have to wait for the program to update tomorrow to all the new moving averages and everything, so we're going off of the old numbers with the new price, so Just bear with me while I do this really quick. Alright, so with the price closing at 597.44, the 5 mile is at 599.33. That means it would be 598. Essentially right at 598, so 598 minus the 176. Okay, so the 5 mile is going to be essentially right at the, hold on, I need to write this down. One moment. I am ill prepared for this. Okay, so I'm gonna write this down. Tab. Okay, so the 5 mile is going to be at 596.24, essentially, give or take. And that means the lower bounds will be at 594 roughly. Okay, so technically we are within the lower bounds of the 5 mile currently. Now the 20 mile, the old level was at 594.05, so let's just go ahead and remove our dividend price. 5 minus the 1 or the 176. Alright, so that puts the 20 mile at 592.29. That puts the upper bounds of the 20 mile at 594.30 roughly. Okay, and I know you can't see my notepad on my screen right now. I apologize. I know that might make it easier for some of you to visually see this, but maybe I could pull that up in a moment. Hold on, let me see if I can add that. I can't add it to the screen. Just 1 second. Display capture. Right now. Oh, that's not working. Okay, so that's not working right this second. I'll have to figure that out another time where I can like type on the screen in, you know, that exact moment. But I'll write down the moving averages after. Or I mean, go ahead and write this down. So the 5 mile is very likely going to be around the 596.24 range. So the lower bounds of the 5 mile will be at that 594 range, give or take a little bit. The 20 mile will be around the 592.30. So the upper bounds of the 5 mile or the 20 mile is essentially going to be the lower bounds of the 5 mile. So it's at that 594.30 range. So if we're starting to trade within that 594 range like we are in the overnight right now, that very likely means that we're trying to test both the upper bounds of the 20 mile as well as the lower bounds of the 5 mile. Excuse me. Now, with that said, the 20 mile itself again is at 592.29, so the lower bounds of the 20 mile will be at that 590 range. Okay, as long as everyone has that clear right now. I'm not looking for a upper Bollinger push from this right now, so I'm not going to go over that in this video. I'll just wait until we get the new values for the moving averages, and we can go over them at that point. Now, the 5 mile is starting to turn pretty bearish again, and let's just go ahead and zoom in onto this a little bit. And when I mean pretty bearish, I mean it's starting to cross over into the longer dated duration moving averages, and that's kind of something you want to see for, you know, if you're starting to get bearish. One of the first signals is when you see the 5 mile cross over the 10 mile, and on open tomorrow morning, that's what we will see. We'll see the 5 mile underneath the 10 mile by at least about $2, $2 to $3. So that's, you know, that's pretty major. And that means that the next step for the bears is to pull the 5 mile to the 20 mile. Um, we'll see if that happens. Potentially, this could be a range where the market um, will buy up the 20 MA test and bounce upward from there. I actually think that's a very high potential. So how I will be setting up the 20 MA is essentially 2 month out contracts. So it's the end of June. You want to be targeting basically end of August, early September. Um, that's a really good duration to be targeting. And what you want to be doing is you want to be buying long duration puts at the very top of the 20 MA. So in that upper bound range. And then when we start pulling to the lower bounds of the 20 MA, that's when you open up those long calls. And you don't have to worry about cutting either side. You're going to have months out. But essentially what you're waiting for is for the upper Bollinger again or for the lower Bollinger. And the market can take, weeks to determine that. And that's why you set that range up. It's the center of the Bollingers. It's basically the center of the trading range, and either the market is going to keep this selling trend going, and we're going to head down pretty massive, or we're going to see buying pick up in this range and head upward. Okay, so make sure you set up that 20 mile range. There's plenty of really good cheap contracts out there, so you can trade like TQQQ, SQQQ, SPAXU, it's SPXU. There's SPAXS, so SPXS, and both of those are inverse funds, so bear funds. Same with the SQQQ, that's a bear fund, but there's no reason why you can't get long dated puts on a cheap bear fund for, really good exposure on that. So just keep that in mind. Sorry, it's like hard for me to talk right now. I think I have allergies. But yeah, you want to set up that 20 mile range. It's super, super, super key. And we haven't had a intraday 20 mile test since I believe April 25th was the last time, and it was right in there, back at the 530 range. And if you look at the prior 20 mile test before that, that was up at the 603 range. So you're seeing massive, massive movements. Almost every single 20 mile move. If you buy a few months out, you're generally going to get at least about $20 worth of movement up or down if you set up properly. Some of these can be pretty massive, like this setup right here would have caught the entire move down to the 481. This setup right here at the 534 would have caught the entire upside to the 605. So definitely set that up, and just because one side starts going red a little bit, don't just cut it immediately. Let it do its thing. Let it move to either the upper Bollinger again or the lower Bollinger. Okay, that was a mouthful. One other thing I want to point out, the ADL has been pulling down significantly, so that does mean that, money is leaving the fund. Obviously, that could bounce for multiple reasons, as I suggested. The 20 mile range can become a very, very, very huge support level for, the bulls to pick up the buying. Excuse me. Now let's go ahead and look at this really quick, and I just want to go over this in my head for a second. So there is a massive, massive gap right here, and I still have my little drawing from prior, but there is this huge, huge, huge gap from the last few weeks of trading, and I've discussed these gaps a few times, but there is a ton of room downward. Now, the market can use that range. Say if it does want to bounce off of the 20 MA, it can trade to the 20 MA and then use that range to bounce upward and, break back into the major buying channel. break away from this major selling channel. And again, that's that blue channel on the daily time frame. That would create structure to break out and build upward. But so far, what we see here is inverse cups, and we're continuing to see what's looking like potentially another inverse cup forming. I want the drawing tool, and potentially something like that, where we're continuing to see this trend where it's moving up, selling down, moving up, selling down, moving up, selling down. So are we going to test the bottom of the bottom bounds of the 5 mile again and see that push us away downward towards the 20 mile, or potentially are we just going to see the price test the upper bounds of the 20 mile and just enter into the full 20 mile range, test the 20 mile itself, and test the bottom bounds. So we'll see how that works. I am anticipating that because we haven't seen the 20 mile test in such a long time. It's kind of just it's time for that to happen. Potentially the market could have used this super large sell-off candle in the pre-market to have done that, but again, that's not an intraday test. That doesn't give the funds time to set up at certain levels and things like that. So I really do believe very likely we are going to see this massive island gap. You know, excuse me, I'm losing my voice here. Break down a little bit and very likely at the very least give us this range right in here, which that would pull us all the way to the 587. Once this all updates, potentially that could be lower, but that's the main support I'm looking for right now if this level does break. But if we do go below that, then potentially there's the 582. So, level by level, and we will go from there. But so far, this is a pretty bearish structure. Yeah, I mean, this is just a very bearish structure. This is turning into a really massive inverse cup. But if we go to the 4-hour time frame, just be advised we do still have that top at the currently it's going to be at the 5 or the 609 60 since the dividend price got taken out. So if we do build enough liquidity in here, we can pop up to that range really quick, do the upper Bollinger move again, and then come back down and then do the whole 5 mod test, 20 mod test. So okay, I'm tired. I've had a long week. Yeah, we're going to call it with that. So tomorrow, just see if we start moving towards the actual range of the 20 mile itself, or if we start heading upward towards the 5 mile. This can be a very choppy range, so just really be aware of where the microstructure, and when I say microstructure, that's literally the like the 1 minute to 5 minute chart, and that would be looking for potential like head and shoulders or cuffs and handles, like right here. Could this potentially be forming a large cup upward to that 595? Very potentially. But if we see that get rejected, then that can form a inverse cup downward. So you just want to be aware of the microstructures, kind of see where that's going and see if, the 5 mod itself is becoming that magnet pulling the market price towards it, or if the 20 mod is being used as that magnet pulling the market price. So, okay, yeah, have a good trading day, everyone. Don't overextend your portfolio one way or another. A lot of people have been doing that lately, and you don't need to. Just set up level by level and let the market kind of just chop its way towards that range, and you're gonna be able to profit very, very well. I've been profiting extremely well the last few weeks, just sitting on some of these longer contracts while the market has been, really chopping in this range. So with that said, have a good trading day, everyone. Have a good weekend, and I will talk to you all on or in Sunday's video. All right, take care.